Welcome back to another episode of Shop Talk by RapidWorks, where we bring you industry insights directly from our experts and dive into topics that matter the most to the heavy equipment industry. I'm Ellery, and today we are tackling a topic that impacts every pumping business, whether you're a small operation or managing a large fleet, and that is insurance. It can be one of the most complicated and expensive parts of running a pump business, but yet getting it right can make all the difference when it comes to protecting your company and, of course, your people. I'm super excited to be joined today by our subject matter expert, Matt Hadley. He's going to bring us a super unique perspective. He's combined his expertise in both insurance and concrete pumping, and will also be joined later by Todd Bullis, RapidWorks' very own concrete pumping expert. Today, we're just going to be digging into the challenges, recent changes, and sort of strategies around insurance programs. And of course, just exploring some innovative ways that you can set your business up for success. Let's just jump right in. Matt, if you can share a little bit about you and your background so the viewers can learn more about you and how you combined insurance and concrete pumping.
Yeah, sure thing. Thanks for having me on. I'm excited to speak with you today. This is not everybody's favorite topic. In fact, I don't know anybody that has this as their favorite topic. So, um, yeah, so I've been in the insurance industry since 2016, and prior to that, I was in a construction business. I built homes with my father for many years, and then he unfortunately passed away, and I had to grow up quickly and run a construction business without him. Um, I've been on the other side of the table as an insurance buyer. Um, it's not fun. It's not fun on this side of the table either, especially right now. It's a really tough insurance market, as everybody knows. And so that side of being on the other side of the table is not lost on me. I remember those days very well. It's insurance is frustrating, expensive. It's hard to deal with, and I've tried to make sure that I don't lose focus of those days or how that was, and then bring that to this side of the table. Try to find ways to make it manageable. It's still not going to be anybody's favorite, but it's a necessary part of your business, and it's something that can actually help people to stay in business in certain circumstances. And so, I try to look at it very objectively and say, hey, every business is different. I want to get to know each owner and how they operate, and then how I can, use skills and resources and relationships to drive, a better result for them.
Great.
So,
That's awesome. It's such an interesting journey that I think it's probably great for your experience too to have kind of both of those perspectives and see both sides of the table. Let's dig into a little bit of what's happening right now in the insurance world. I guess, how do you see sort of recent changes in insurance programs impacting concrete pumping industry today?
yeah, so there's been just since I've been in the industry since 2016, right? It's been less than 10 years. There's been a few specific concrete pump insurance programs, and most people, in the industry know about them. Um, and they've kind of come and gone over the years. Some have lasted longer than others. And the idea was to try to create a specific niche program that was insurance that was tailored to the industry of concrete pumping, right? And it can be successful. I think some of them have been successful over the years, and so right now there's those programs are gone. There's a few that have maybe a small pulse and are barely alive, but they want the cleanest of cleanest accounts. Um, they want the best of the best as far as claims and losses and loss control and all the technology they can. They want the cream of the crop, and that's not the case with the majority of the pump industry. Y'all have probably better numbers than I do on this, as far as the landscape across, the country and even out of the country of the general makeup. But most of the pump companies have less than 20 concrete pumps across the country, as far as I know. So those smaller operators, so to speak, they don't have as many options when it comes to insurance. If you have more than 20 pumps, you have more carriers are going to pay attention to you because they want the higher dollar premium. And so they're willing to look at, various options. Whereas if you're a smaller operator, there's just not a ton of carriers that really, not as many, I should say, that really want your business. And so they're not willing to come up with creative ways to design a program. So right now, it's really tough just to find insurance placement, from heavy auto, these are big trucks that are on the road, to the general liability, the liability exists on the job site.
Mm-hmm.
It's a tough industry to insure, and more carriers are getting out of the market and just saying, we won't quote this. It's out of their appetite. So if you shrink that down and there's fewer and fewer players, it just gets more and more expensive because, right, there's that demand is still there.
Yeah.
And there's not as many insurance carriers to provide competition.
So kind of starting to touch on those challenges that they're starting to see in the industry, what do you see as the biggest roadblock or major challenge that these pump companies are facing when it comes to obtaining not just affordable but adequate insurance coverage?
Yeah, that's a big distinction, what you just said. So you could probably go get a policy, right? It's very stripped down coverage, but it's a piece of paper and it'll keep you going down the road until there's a problem, right? And we've all seen this, like even with your personal insurance, you could go get a policy that has very, very little to no coverage or very weak coverage language, but it's you can, if you get pulled over, you can show I have proof of insurance and you pay your premium and you keep going. But if there's a claim, you may not have an advocate on your side that can help you walk through the claim. And so you're stuck. And now you've got all this time, payroll, and frustration trying to deal with a claim where another carrier would probably walk you through it or broker would help you through this. And then on the other side, there's some carriers that just will completely exclude certain times of operations, right? I'll give you one example. This is a few years ago that I walked in. I got a call from a concrete pump company, and they said, "Hey, we'd like to meet with you." Right? So I go visit with them. I typically ask to see their policies and see where they're at. And this concrete pump company, that's all they did. Right? 100% pumping. They didn't have any other operations. And in their general liability policy, their specific operations were excluded. So they had a policy, but if there was any claim that arised out of any kind of concrete operations, it was excluded. And so I asked the guy, I said, "Hey, let me just read this to you, right?" And look, the carriers all say there's a contract, right? When you get a policy that you agree to read through the policy as the policy holder, right? Like I'm the broker, and the contract is between the insurance company and your company, right? Your pump company. So they expect you to read it. I understand very few actually read the policy. These are written by attorneys for attorneys, right? So the language can be frustrating to read or difficult to understand. So try to translate that in English. And in this case, I said, "Hey, let me just read this to you." He's like, "Yeah, I had no clue."
Oh my
So
God.
I'm like, "Well, you bought this policy and it has no coverage." So that's a pretty big risk, right? You're just throwing money away in the event you have a claim. So part of it is compliance, like you said. Like you gotta have insurance to operate a truck on the road, right? DOT is going to hammer you if you don't, put you out of business or put you out of service. And then if you're signing contracts with either commercial or residential builders, they also have insurance requirements by contract. And so there's the compliance side, and then there's the coverage side. And I still run across situations where either the coverage is not there, or and just about every situation where it's so expensive, right? It's difficult to find insurance that's a viable option right now.
Yeah.
Good question. So if you have a policy, you should read it. Make sure you read it. If you haven't read it, go read it.
Yeah, and if you don't want to read it, have your broker read it and translate it, right? And I again, you're under a contract to read it. That's the insurance company says you got to read this policy and so yeah, read your contracts, read through them, have an attorney look at them at a minimum, or have put it through ChatGPT if it's something, right? Do something to help you understand it. But
Yeah. Wow. So it's definitely a lot of hurdles to overcome. Could you maybe share some innovative or alternate insurance options that you've seen or maybe that you'd recommend?
yeah, so I will say that it's ever changing. I visit with underwriters every week from some carrier or some broker that we're trying to place insurance with, and it's always changing. We had an underwriter in our office last week, and he flat out said, if you have a commercial fleet, and he didn't give a size, right? So you can identify that however you feel like is best. If that's 10 or more, or if that's 3 or more, if that's 20 or more, whatever. He just said, if you have a fleet on the road, a commercial fleet, and you don't have telematics and you don't have cameras, forget about trying to get affordable insurance. You won't even get any insurance here in the next 2 or 3 years, right? And I think that's probably generous. I think it may be a shorter time frame than that. It's just getting tighter and tighter and more restrictive. There's some grandfathered accounts that they have a good relationship with the underwriter and the broker, and they'll just keep renewing them. And those companies are typically pretty safe, and they go the extra mile. I could see some of that probably continuing, but those are very few and far between. Spend the money would be my recommendation on technology. Make sure that you educate your operators, your drivers, your mechanics to actually use the technology, understand what it is. If you have a vendor, and there's a lot of them that use telematics or cameras, and some offer both, have the rep come out and teach your operators, right? If that's a rainy day and you're kind of shut down, like use that as to your advantage to have the rep come in and educate your staff and make sure that it's actually being used. And then on top of that, use it to train, right? There's a lot of these applications that many companies don't even know what they've purchased. And so they don't know what's there that is at the tip of their hands, at their tip of their fingertips, they can actually use and then capture that data and get it back to your broker so they can communicate to your underwriter. And if there's a breakdown in that communication at any point, the underwriter is just going to assume the worst, right? So I would say, to answer that, like, use technology to your benefit, get educated, have the rep from that technology company actually come and teach you how to use it, and then train with it, make sure that it's ingrained, because it's not going away. It's not like, the industry's just going to 10 years from now say, you know what, technology thing was fun, we're going to completely throw it out. Like, no, they're going to continue to use it and then just rely on it to even get you a policy in the first place. So I would say, embrace technology, especially when it comes to safety and compliance. Learn what you have and utilize it, and then get that documented data back to your broker.
Cool. Awesome. Yeah, I think that's a big part of what makes this conversation so great with you, is that you've kind of gotten to see both perspectives. You see both sides. How do you think, from the other side, insurance companies then can better support pump companies in mitigating risks and those risks associated with concrete pumping?
That's a good question. There's definitely some onus on the insurance companies. And I will say the brokers like me, that's where you really need to get additional services. The insurance company themselves, there's some that will do some risk control, but it's kind of a misaligned allegiance, right? Because let's just say that carrier, I'm not going to name them, but so a lot of the big carriers, let's just say you have a policy with them, and then all of a sudden their appetite changes, and they say, "Hey, we're no longer writing concrete pump accounts at all." Or we're going to be very selective, and they non-renew you, or whatever the case. Everybody's kind of been through that at one point or another. Or you find a better deal. Your broker finds a better deal, and you move away from that company. If that insurance company is your only resource for loss control and safety, they're gone, right? So they're going to be really reluctant and unwilling to share their data with another carrier who's their competitor. Even if you paid for it, they're not going to be very helpful at that point if you've moved on from them or they've moved on from you. Mm-hmm. So my recommendation is to use your broker and have the broker make sure you know who your first point of contact is for a claim. Like if I'm in a meeting like this and you have, if there's a serious claim, there's a good chance I'm going to stop what I'm doing, even if it's with you find people, I love you guys, but I'm going to stop what I'm doing and address it and get my claims advocate on the phone with them immediately to triage if it's an emergency, right? So know who your contacts are, have their cell phone numbers. If it's a claim, if it's something simple like a service, everyday service, like a certificate that's either holding up payment or preventing you from getting on a job, like that's got to be addressed immediately. Like we typically don't have those sit on our desk longer than 30 minutes. It's unacceptable, right? If you're going to insure this industry, you need to have that level of service. If it's an auto ID card and you're, smaller pump companies waiting at the DMV or DPS to get, to get that truck registered and they need proof of insurance, like you're just burning hours, right? Mm-hmm. So make sure that you have people that are going to respond to you quickly. And then on top of that stuff's kind of basic and easy. On top of that, you need to have someone that is going to deliver on loss control for your business. So really understand where your weak points are, right? Like I want to come in and say, hey, I'm going to treat you like, we have a DOT expert. I'm going to bring him in and his team, and they're going to perform a mock audit, just like the DOT would. And we're going to, we don't want to schedule it. We're just going to show up and do it like they would. And let's see how you are and where you're deficient. And then we'll help you to get better and supplement where we need to. Same thing on the job, right? Like we'll probably schedule that with you. We're not just going to show up on a job site, but we want to see and take photos and then use that to come in and help. If you have a loss or a safety company you're dealing with, we can share that data with them. Very few companies actually do this stuff proactively, but use your broker, use your insurance company to help you. If you're paying them a fee or the carrier's paying them commission, they're getting paid. So use them, right? Make sure that it's worth your time to pay them as your broker.
Yeah, great. So going back a little bit, you mentioned a lot of the changes going on, current market shifts in insurance programs or lack thereof now, but what strategies would you recommend companies implement to give them a chance with the insurance portion of the business?
Yeah, so we already kind of mentioned technology, telematics, and cameras. A lot of guys are very against, guys and gals, right? They're very against telematics from a camera standpoint because they feel like it's Big Brother watching them. Well, first of all, you're not going to have the option to say we do or don't want cameras. Like they're going to continue to be mandated as time goes by. I think there's a fair argument to say that the driver-facing cameras may put you at some legal disadvantage if there's so much footage for an attorney to view in an auto accident that, I mean, like I try to be safe and cognizant of what I'm doing and practice what I preach, but I'm not going to sit here and tell you I don't look at my phone once in a while I'm driving. I think everybody probably does that. Very few exceptions that can honestly say they don't. And if I'm taking a drink of a soda, or if I yawn or something, or look like I'm not paying attention or drowsy, I mean, it doesn't take much for a litigation attorney to be like, that's what we needed, right? The guy yawned and 2 minutes later, he caused this terrible accident, right? So I think there is a variant to use with the driver-facing cameras that maybe there's a conflict there. I get that. But anything that's facing out and showing the road, I'm a big fan. Like, you got to have them, right? And if you can add cameras, everything costs money. I get it, but if you can add cameras, that's going to keep you out of a situation where it's a he said, she said on the side of the trucks or the rear view cameras, and that's gold, right? So that's something that I would just you got to do it, right? You got to have it because everybody's been in a situation where logos on the side of the truck and there's a story. All of a sudden, somebody's got, even if there's no contact, like there's been just allegations, and you don't have to deal with that. Say, hey, all right, when did this happen? Like, here's the timestamp of the video. We're going to pull it up and squash it immediately, right? Like, every insurance company's going, all right, we got it. Like, this is a BS claim. Mm-hmm. Well, if you do make contact, let's say you're in a parking lot or you're at a stoplight and you bump somebody in front of you. Well, everybody knows that as soon as they get an attorney, the attorney's going to say, go to talk to this doctor. And this doctor's going to say, alleged neck and back pain. And then you got a doctor's note saying this. And all of a sudden, it's like this little fender bender that's going 2 to 5 miles an hour is now a $500,000 claim. Like, that's just crazy. The actual damages are nowhere close to what's being demanded in litigation, right? So that's where cameras can really be a get out of jail free card. If it is your driver's fault, we want that camera footage as well, because, like, let's not drag this out for 2 to 4 years in litigation. Like, raise your hand. We screwed up. Here's the proof. Let's settle and learn from it and move on, right? We don't want to have that claim sitting on your loss runs for forever and affecting this year's and next year's plus the next 5 years insurance rates. And we don't want to have, that person be able to speak to more doctors and then go get an MRI and this and this and this. Like, it just gets out of control. Let's nip it in the bud and use technology to help us. And then, the other things they can do is just everybody knows to what degree they're actually being safe. Mm-hmm. Every pump company that I know of thinks they're safer than they are. And I don't mean that, disparagingly. I work with a lot of pump companies that are really, really great people, down to earth guys. That they really do want to do the best job they can. They're honest. They work hard. They want their guys to go home safe every night. And I think that is the most important thing to them over profits. I do feel that way. But we'll see, like, a pre-trip inspection was done, and then the guy runs out of fuel before he gets to the job. It's like a nice pre-trip, good job. And then that kind of stuff happens a lot. And obviously, like, if you get pulled over and your tires are worn down to where you get put out of service by a roadside inspector, you didn't do a pre-trip. Plain and simple, right? And if your brakes are so bad that you can't slow down and they put you out of service, like, you probably didn't do a pre-trip, right? So those basic little things like that, they happen a lot. The bigger your fleet is, the more complicated it is, but you got to scale that way. Like, if you add a bigger and bigger fleet and you start feeling like you're out of control, maybe we need more people. We need a supervisor to be able to help with those gate checks and pre and post trip checks. The other thing is, make sure you know who you're hiring. Like, there's hear stories all the time, guys that constantly fail drug tests, and maybe we say, oh, he's a good guy, I want to keep him on. Of course we want to help him out, but at the same time, like, you gotta protect your company and the rest of the employees that are there. And so let's not let one bad operator hurt the rest of us and hurt our profitability, and take away opportunities for bonuses for the 99% of the guys that are, checking the boxes, doing their part. So, know who you're hiring, look at their driver records. It's all public record. You have to pay a little fee for it to get the record, but let's do those things. Vet your drivers, your operators, make sure they actually know what they're doing. Make sure you have a training program. It's not a half a day. It's, 2-3 weeks that we're riding with this guy and on the job with this guy. Make sure we all feel comfortable. He does, we do, and that he's going to represent the company well. Those kind of things will absolutely prevent claims. And that's the difference maker. So you just have to do the little things every day. And, I think you're not looking for the result. You're looking to fall in love with the process. And that's how you win is in any business is you got to do really good at the small things every day. And if you can do those things consistently and well, then you're going to be a good performer and you're going to have a better outcome.
Yeah. Yeah, you make a really great point too about I think a lot of people are probably hesitant or the costs or the added tasks and the to do, but in the long run, you're really saving yourself a lot of trouble. So I think it's a great point to call out those kind of little things to do. Don't overlook them because it'll bite you. Um, and I guess let's go into a little bit. Let's talk shopping. In your experience, are there any areas where pump companies typically go wrong when they're shopping for insurance?
Yeah. Yes.
Yeah.
This is like, and I thought almost opposite of the way that you probably should think about this for years. Um, and part of that is just the construction industry. We're very bid focused, and most people with the mindset of a bid control kind of focus is that I'm going to get this guy to bid against this guy and another guy. And if I get more people involved to bid against each other, it's going to drive the pricing down, right? That typically works in like a commoditized type of situation, right? So think like ready mix, right? If I can get this guy to give me, um, a 5,500 pound mix or 6-bag mix or whatever mix design is for this job, structural or not, I'm gonna give them my mix design and specs and say, hey, they can give it to us for X amount per yard, and these guys are giving us a break based on volume. Like you can kind of create that bidding war, um, or it may be like parts and pipe for pump companies, right? We can kind of look at it and drive down the cost to get through competition. In insurance, it just does not work that way, and I'll explain why. So I'll try to be quick with this and not bore you to death. But the way it's set up is that you have a pump company, Ellery, right? Let's just say it's Ellery's Concrete Pumping, and you got to go buy insurance, and you're frustrated because it's expensive. So you have your broker that you've been using for, I don't know, 5, 6, 10 years, whatever. It's a buddy, and you feel loyal to him. And so you're like, hey, I'm gonna just call this other guy that's been bugging me, this Matt guy that's been bugging me, won't leave me alone, and let's just give him a shot. Well, what you just did by getting another broker involved was you just blocked both of us from doing our job well. Because what happens is, let's just say, I'm going to use them as an example because they're a monster company, but Zurich is a huge insurer, right? So let's say you want to get a policy from Zurich. Well, your buddy that has been your broker forever and me, Zurich will give one quote to only one of us for your business for that year, not both. So there is no competition. It's just we don't like I don't have it or he doesn't have it. One of us is going to get screwed to not get one of the better options. So you kind of have to remove that whole thing and choose your broker. Choose your broker and have that broker then go and shop to as many carriers who's actually writing the policy, right? The brokers, we don't set the rates. We don't write the policy. We don't write the coverage, the terms, the forms, none of that. We check all that and make sure it's right. But the broker we're trying to broker the best deal for you. That's why we're called a broker, right? So we have to go and find, like a bird dog, the very best deal that's from coverage and price, and then deliver on service. That's really what your broker's going to do. So if you have multiple agents involved, you're actually just making them all B and C players. You don't have an A player, right? I can't come and look you in the eye and say, hey, I've got the best quote for the best coverage and the best price. I can't do that. If I'm your sole broker, then I absolutely can do that, because I can shop to the entire marketplace and create that competition that drives rates down, right? Let's make the people who are actually setting the rates and writing the policies, that's who you want competing for your business. And so that's where I think a lot of pump companies go wrong, is they look at it from a commoditized bidding war, and it just doesn't work that way. And so you've got to find a trusted advisor that's going to be able to represent you to the entire insurance marketplace, find the best deal, and then bring it to you with multiple options.
Cool. So say a pump company hears all of this and they want to start to make some changes. What are some obvious or obscure or small changes that they can start to take to help them get better pricing?
So I hit on the technology thing a lot. And if you're rolling your eyes and listen to this as a pump company, I'm telling you, like, you got to embrace it. It's a pain, especially if you have no technology and now you're hearing this telematics and cameras and all this crazy. Like, I get it, but you've got to do it. You've got to get on board, or else you're going to be behind, and you may be able to get by for a few years till you have a claim, and then you're there, because that every company's going to come in and say, okay, tell us why you're different. Tell us, and if you start looking at it from the insurance company's perspective, it changes everything how you think about it, right? Because if you can think like the insurance company and think, why would I want to insure myself over everybody else? Why would I want to give myself preferred rates? What am I doing to show that underwriter that I'm different and I'm actually better than my competition in terms of safety and all that, right? Because the insurance company, like, love them or hate them, and they're an easy target to hate. They're like this faceless giant corporation that has all this money, so they're easy to hate, right? But they're just like your business. They have revenue and they have expenses. And when those expenses go out of control, they have to underwrite for that. So it's a formula, right? And they're taking a bet on you to say, hey, we think these guys are actually going to be safe. So this amount of premium makes sense to charge them on the front end, because we think they're going to have this X amount of claims. And when you go over that amount, right, you're costing them profit. And so when your customers cost you profit, they cost you money. How do you look at them, right? You want to do business with people and have partnerships that are going to help you to grow your bottom line and make money, rather than cost you money. Not only just cost you money, but cost you profit. So it makes them like, we don't really like these guys anymore because it costs us money every year. So, if you can look at yourself through that lens, you're going to be better off.
I got two quick questions for Matt, if I can, real quick.
Yeah,
Um,
totally.
One, what I've learned from you and the time we spent together is everything matters. Your website matters. Like, what are you showing on your website? Are you showing 5 different things that you do? Because the insurance company will find that. Your Facebook posts. Like, do you have a social media policy for your employees? All those types of things. So that, I've learned that from you, and how important is that really? And then the second question is, when I have customers that complain to me about their insurance, they already have a broker, and I say, hey, you should talk to my buddy Matt. How do you save them 20, 30, 40%? Because you're just another broker, right? So it kind of is going against what you were saying.
Yeah. No, these are good questions. I appreciate it. So first of all, yeah, everything matters. Your website, the way that, and like everything that's publicly available, we see it, but a lot of the insurance companies have already seen it as well because it's public, right? So, and I think that's another way I thought differently on this. I used to think like, hey, I want to do anything I can that's going to make my company money. So if we can do this one-off thing and we actually made money on it, maybe we can advertise a little bit for it. But it's like either like out of my scope of what I'm comfortable doing, or it's like very risky. Don't advertise those things, right? Would be my suggestion. Just um, be smart about what you're going to put out in the public view. Social media is a big thing, right? Don't hang from hoses. Just don't do it. Don't hang from the boom. Like don't do these kind of things. It does matter. It does have a negative impact on you. If not from an insurance perspective, definitely from a legal environment. If you get into any kind of a claim, it's like, well, look what these guys do, right? This is who they are.
A website that says we do this type of work and 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 this type of work. Insurance companies hate that, right? They want like, okay, don't give them all that information because your liability just went up in their eyes, right?
Yeah, I'll give you a quick example of like just about every carrier is terrified of class action lawsuits, right? Because they can have 100 claimants in one single issue, one claim. Like one job can have 100 claimants from the neighborhood. So that's why a lot of carriers say we don't do residential, or we cap it at a certain percentage. And then a lot of times the pump companies will like advertise we do work for tract home builders. It's like, if you do, then own it, and that's what we do. And then we got to go to those carriers that are okay to insure people like that. It's fine. But if you're primarily a concrete or a commercial pump company, and you're advertising that you do like a production builder on your website, it's like no, we don't want to advertise that, right? So just be smart about that kind of stuff and just ask questions. It definitely matters. Like to stay in your lane of what you're really good at. Those one-off jobs, I wouldn't advertise them. Just at least from an insurance perspective. I'm not an attorney, but I imagine that's gold for them too. And then your second question, like how do I save companies money? I can't save every single company money. I will say that, but usually there's a way. And what I try to do is challenge what they're doing right now. I can think of 2 times where I've reviewed policies, and I've reviewed their safety program, and I've reviewed their losses and come to their yard or gone to a job site. Twice I can remember saying, you know what? I can't touch this. Like, keep doing what you're doing. You're doing a good job. And it's a pat on the back for their broker. It's very rare that I come across that. There's typically a way that the way you buy the insurance, the way you're marketed to the insurance marketplace, which is usually the issue, right? A lot of times a broker would just kind of set it, forget it, or an agent will just say, hey, we're with this company and they gave us good rates last year and the year before that and the year before that. So we're just going to renew it. And, I'll see you 2 weeks before your renewal and pick up the check and thanks for the business. And so we see that they've been with the same insurance company for a long time. There's probably a weak point there. They've been with the same broker for a long time. There's probably a weak point there. More often than not, though, it's something to do with their safety. And it's either they're not doing something that they should, or they are doing something and the insurance company has no clue, that we want to make sure to promote and put in their submission. We find that sometimes, and you're paying this money for this safety goal that you have or whatever, and you're doing all these extra things and the insurance company has no clue. Well, let's make sure that that's brought to light. And then I will just mention one other thing. Every insurance company has what's called a loss pick, and they derive a loss pick to kind of determine future losses as best they can, right? Nobody's got a crystal ball, but they've got algorithms and really smart people that come up with an understanding of, okay, we think this company, based on their losses, based on the submission and the narrative the broker sent in, based on what's on their, every social media, all their stuff that's public and on their website, we think they're going to have X amount of losses this year. So let's just call it $1 million in premium. Okay. if you have $1 million in premium, typically the percentage is about 60% of your premium is set aside to pay claims. Okay, so put that aside for a second. I want you guys to think like your homeowner's policy. Okay, if you actually spent 60% of your annual premium on homeowners losses, I'm gonna pick on you, Ellery. What do you think would happen the next year for your renewal?
Oh, it's gonna jack up the price.
Like crazy, or they'll
Yeah.
probably drop you, right? Think about
Mhm.
it. If you spent 60% of your premium every year, so that tells me two things. One, they expect you to have claims,
Right.
right? They underwrite it to kind of expect you to have claims. And when you don't, what happens to that money? The insurance company keeps it, right? It's so the 40% that's like their fixed cost, there's already underwriting profit built in typically to that 40%. So they're already making money. If you have 60% of your premium goes to claims, they still make money, within reason. There's some variations to that, but that's typically how it works. So this 60% bucket is premium, right? For them. Well, that's good if they only have one person to insure. But you got to look at the entire block of everyone they insure, and people are going to have total losses to their houses, right? They're going to lose in fire or storms or whatever. And so, like, they're going to pay out far more, right? You pay your homeowner's insurance company $2,000 a year or whatever, $5,000 a year, and you have a $500,000 fire. Well, you can do the math, right? So that's why there's a spread of the risk. But generally, they anticipate you having 60% to go to claims over the whole, their whole block of business. It's the same thing with commercial insurance. And so there are ways that you can structure the way you buy insurance. And that's one of the things that we specialize in. I specialize in is we look at let's try to capture some of that underwriting profit, and it's just the way you buy it, right? And see if you qualify for a different mechanism and a different way to buy insurance. And not all pump companies qualify. You got to have, really good loss ratios, meaning that you got to have very few claims. Your loss ratio is the amount of claims versus premium that you paid over a 5-year period. And if you can kind of identify the one key metric that underwriters look at, that's it, right? So the lower that percentage is, the more attractive you are to an insurance company. So that's just a math equation. We either need to lower our claim percentage or claim amount or increase our premium or both to get that number to go down, right? Um, Not very many people want to increase their premium, so you got to figure out ways to get your claims down, and that's the way you get that percentage to go down. Um, so yeah, I mean, there's always a way. You just have to really strip it down every year. Don't take anything for granted. If you get a good deal from a carrier, don't think that deal is going to be there for even 2 years, because it's probably not. Um, have your broker strip down everything. You got to act like I treat my clients like I've never met them once a year, and I'm going to walk in and not make any assumptions, and treat you like your brand new account, and let's figure out how we can make this better.
Cool. Um, so we've talked a lot about kind of risk management. You've mentioned technology a couple times. And so tools like RapidWorks, for example, can kind of start to play a big role here in protecting and just setting up your business for success. Todd, do you want to walk us through a couple ways that that actually works in practice, or the things that we've kind of set up in RapidWorks that will help do this?
Yeah, sure. So, we like to deal with our customers' biggest issues and problems. And, um, you know, some of the things that we do is we track what you're doing as a company. When I say we, I really mean you guys. So like all your maintenance inspections, your certifications, your operator licenses and certifications and job requirements and all that stuff is stored in our system. We have on-job safety checklists now for different particular types of jobs, be it a commercial job or a housing slab or whatever. Different checklists that you can do when you're out on a job. Our app will allow you to take a picture of like your setup, and you can track your operators, quality of setup, and you can use that as teaching aids, right? We allow you to monitor all your operators' hours live, so you can see instantly instead of like telling an operator to go do a second job when maybe it's Wednesday and he's already got 40 hours in and he's tired. You can see that and maybe give that job to somebody else, right? You can make better decisions with our system. Um, we're really I believe we're really the only system out there that tracks and allows you to see live and also allows you to print out a report. So if you need like a maintenance report of a piece of equipment, you can see it, right? If there's a DOT, you get pulled over by DOT and they want to see the documentations, you can show it right there, right? So, it's really important. We're doing more and more all the time based on the criteria that, our customers are telling us, like, hey, this is the problem I'm having. How do I track this? How do I deal with it? How do I report on it? How do I, we're dealing with OSHA issues and trying to make things more automated and allow them to, see live and also to do reports. So it shows like uh, a really good due diligence. So if something does happen, you can at least go, look, this is what we do. We have everything tracked. We're compliant. Our guys aren't working more than what they should be working. Our guys are, doing their pre-trips. Here's their pre-trips every day. You can pull equipment from the schedule. If it doesn't pass a pre-trip, instead of just going, yeah, I have bald tires. And noting it and then taking the truck. You can set your company up to where when things don't meet the threshold, um, it'll report on it and you can pull it, right? So there's quite a bit that we do, and more that we will be doing. The insurance industry. I don't think anybody likes the insurance industry. Auto insurance, home insurance. But it seems like for some reason we really get picked on in the concrete pumping industry. Like I was talking to somebody the other day, and they were used to paying like $1 million a year. And if you ask them, is $1 million like, is that reasonable? They'd be like, no, that's not reasonable. And then they get their next bill and it's 4 million. And then they're just like, what world do I live in? And as I've gotten to know Matt and as he's helped a lot of our customers, a lot of people we know, I've learned a lot. Like I didn't know what's on your website is actually important. You know, um, what's on Facebook is actually important, not just because you don't want to have a bad reputation or you don't want a lawyer seeing it in case there's a lawsuit, but it affects your insurance. Like Matt looks at your website. Matt looks at everything, that all the data that he can find, because he wants to service his customer, and he wants to tell people like, hey, you shouldn't do that. My recommendation is, so because he wants to write the best policies and make companies happy. So you know. But RapidWorks works with anybody that will work with them, and Matt's been great, and he's been helping us, and showcasing Matt, I think, is a real good benefit. He's one of the industry's only advocates in the insurance side that I've found in a long time. So
Yeah, it's awesome. I think having someone like you who kind of has a foot in the door in both areas, it's really great to get all of your insights on all of these things. And I think we've covered a lot of really valuable stuff. Before we close, I just want to ask you one more question, Matt. When you look at the most successful pump companies, what's the number one thing, if you could name one, that they're doing to obtain competitive insurance policies?
It's a great question. Um, and I'll just hit on one thing that Todd mentioned, and this is going to play into my answer, but capturing your outrigger setup, like you can do that through RapidWorks and capture that, right? And force your operators to do it. Like if they're being watched, they'll probably take more time and do a better job on setting up, right? So specific to the pump industry, there's three things on the job that cause the biggest claims. It's hose whips, boom tips, and power lines. Right, those, and I would say a fourth would be like issues around the hopper, right? But typically it's those three, um, and they're all preventable. They're 100% preventable. And so Todd, you mentioned that it seems like the industry is picked on. I just don't say. Gotta be careful. Like, I don't want to disparage. I know that guys do a good job. They work hard, and they're probably thinking, "Who's this joker that's telling me?" But I'll say, like, I've been to enough job sites. I've been around concrete pumps since I was a little kid, and they're fascinating. They're probably the most fascinating piece of equipment in the construction industry. Like, it's incredible, right? But they can also hurt people, and so that it's you got to have specific training and all that. So I just I don't know. I see pump companies that they just kind of they're blowing and going and just getting after it, trying to, we got to make money, we got to make money, we got to make money. The ones that stop and go the extra mile to make sure their equipment is clean and the maintenance is done and buttoned up and their operators, all their paperwork and documentation is in place, they're probably going to miss on a few jobs. And it's the best miss that they could have. It's like, and they know it. Those guys that operate that way, they'll pass on a job if they know that there's a risk that's just not worth it. And those are the companies that seem to not get picked on, right? I'll give you just one quick example. I have two different pump companies, and they're in the same market, and one of them pays 10 times the amount of insurance that the other one does. 10 times. Okay. They're in the same market. They're about, they're within an hour of each other. Um, and the one that pays 10 times, he just always feels like he's being picked on. He says, "Hey, the cops always pull us over and they're targeting us and they make it hard for us and all this stuff." And I listen to him, and I think there's something to some of it, but most of it is because he just doesn't have things in order. And he doesn't spend the time and money to get things in order because he's too worried about chasing the next job. And meanwhile, the guy that's down the street that pays a tenth of a rate, he's like, we we have a zero tolerance, right? If we see a guy that's doing something stupid, he knows he shouldn't, and breaking a company policy, you're done if it's serious enough, right? And they'll let guys go that have been there for 2 or 3 years and they're good people. He's like, "Sorry, you can't work here. You can go work somewhere else." And it's hard to find good operators. It's really hard. Um, it's hard to make money in this business. It's hard to have guys up at 2 in the morning and hoping that they got enough sleep. It's hard. It's hard to compete. It's hard to keep your price simple. It's hard to deliver on service, but it's also hard to have your insurance go up by 4 times. So you got to kind of choose your hard, right? Like, which hard would I rather deal with? And it's all hard. And so that's the thing I see. If guys are proactive, it's not shopping to a new broker that's going to change the game for you. It's, like I mentioned earlier, the little things every day that make you a really, really good company. Forget about insurance. Like, you can be a really good operator and a good uh, operation and good corporation. It tends to kind of go down the line to every facet of your business.
I noticed a little bit of a trend happening lately where the guys that are hypersensitive to a safety culture will actually do things that they're not required to do, but they think it's the right thing to do. And they're very proud of it. Like, I've talked to two companies recently, pretty good sized companies, and they have cameras that face the operator. And they say it's the best thing they ever did because they could not believe what was happening in that truck. Guys eating lasagna meals while driving a 52 meter down the road.
Yeah.
Guys like and for them personally, they just felt so much better about their company and themselves once they got that taken care of. Like once, okay, we don't do that anymore. And when somebody does it, I see it, and I get
Right.
notified by AI, and it tells me, and then we can deal with it, right? So I know we're like 100 times safer than we were before. And then other, companies
Yeah.
that are like, yeah, we always have dunnage trucks. We have trucks that go out, we have, things that aren't required, but they're actually taking that extra
Yeah.
step. I think it really does build reputation. And, I guess it's harder for the insurance companies to pick on them, you know?
Yeah.
But the other thing is some of these companies used to be probably maybe some of the biggest offenders, you know, but they learned,
Yeah.
they learned like it's
Right.
profitable to be safe, like it should be a line item in your budget,
Yeah.
and so yeah, I see that as a kind of a new trend with some of the companies, so
Yeah. And the guy that I mentioned that pays a tenth of his competitor down the road, um, he's always trying to find ways to make his guys better. Right. He's like, he kind of nerds out about gadgets and technology because some of that's a personality thing, but it makes a difference. Like it makes a difference how you manage your guys and manage your business and manage your fleet. Like it's just a better way to go about it, to be proactive rather than reactionary to everything and saying, oh, like we messed up, how do we bury this and like have the least amount of people find out about it. It's like, no, be open. That's another thing I would say, Ellery, is that the guys that are are proactively being open with their operators. Like they don't try to hide how much they pay their guys. Like here it is. They don't try to hide their pricing and try to sneak things. They don't try to do any of that. They're very very transparent and open, and have a competitive advantage somehow. So yeah, I think it's you know it's just a different mentality of how to go about running your operation.
yeah, I've noticed that, I've said this like last year. I feel like our industry is becoming an uninsurable industry. And people are going to start going out of business just because, there's no profit, once the insurance company gets their share. And, I, I hope that there'll be a big change in our industry where insurance is a benefit to the company, not what they see as like a necessary evil that lurks over them, and they fear the renewal, like what's going to
Right.
happen next,
Yeah.
so yeah.
Yeah. I'll just mention two other quick things is that you got to be able to plan ahead as well.
Mm.
Like this is not a 30-day exercise. It's more like 6 to 9 months. The market is so hard right now that you have to be looking at options way before your renewal, right? You like right after your renewal is kind of a good time to look, okay, what did we just do and how can we improve? Because it's on your mind and you don't want to deal with it a lot, but make sure that your broker's constantly working for another option for you, because you can't just take what's being given because it's none of it's good right now. It's like it's all expensive. And the other thing I was going to mention is that what you said, Todd, about the driver facing cameras. I early on in the call I said, I could see the argument against them, but man, I know the company you're talking about and they've embraced it 100%, and they're not alone, right? And the guys that do, they say, okay, here's where we can show the driver, like, look, here's the proof, like we need. And then now there's a higher expectation and a standard, and that's a bold move to make, to say, hey, we're done having this risk out there, we're going to do something about it. Same thing goes with setting up outriggers. It's like, hey, we could use the 2x2 pad that the manufacturer sends out and probably be quote unquote compliant for the size of the pump. But do we really want to use that, especially when there's a boom tip probably weekly somewhere in the country, right? It happens all the time. Um, I don't see that many cranes, mobile cranes or otherwise, that have that problem where the crane tips. it's so rare in the crane industry, and it's very similar, right, in terms of setup. And so I think if like a GC would never tell a crane, no, you got to go set up over there. Right? It's so rare to see that, and yet we just kind of take it like, oh, the builder said I got to set up over here, or the subcontractor says I got to set up over here. Like, well, no, like this is where we have to set up, And crane companies have that standard set where it's like, no, we don't. You don't dictate where we set up. Like this is where we have to do it. And you can have the best contract in the world, the best job ticket language that indemnifies you. And at the end of the day, if you knew better, you should have done better. And maybe it's on a larger job, you just do an extra pre-trip, like send a guy out, do an inspection, or double check, right, with the builder, say, hey, this is where we're setting up. Absolutely. And we're not moving from this spot. And I know that there's some real world issues with that, like access to, be able to get the concrete where it needs to be. And it's hard, but the guys that just set those standards and say, we're not going to move from this, typically are not picked up.
What about, are there coaches out there to help get the best insurance rate, or is that the broker's job, or do all brokers do that, or is that something that's kind of being developed now in the industry?
Yeah, so there are like consultants that are third party and don't work for a brokerage, and then we have our own in-house that, a lot of that just goes back to loss control. They're in our loss control department. I would say not all brokers are created equally, just like all pump companies are, and so very few are really like diving into the risk. They just say, hey, send us your information and we'll submit it, and here's your quote. Very few are actually like, hey, we want to come to your yard and get to know you better, and we want to come to a job site, and we want to really like understand what you're doing and make recommendations on the negative things and highlight the positive, and make sure that those things are all included in a narrative that goes out to the market. But yeah, it's not very common to have a third party. When I see that, it's usually like in the buying window, they'll have a third party say, hey, and we're going to beat up this guy on their rate. No, you can do better in this. And sometimes that's effective, but at the end of the day, it can't really move the needle long term. Maybe for 1 year or 2 years, but yeah, I don't see a lot of coaching in terms of safety to be able to get better rates. That's your broker needs to be doing that.
One last question that came to mind while you were talking. So we've had huge increases over the last few years, and a lot of carriers pulling out of the market, not wanting to insure us. So with these huge increases, are we kind of leveled out now? Like this is the new reality, or is is the $1 million to $4 million difference going to be $4 million to $6 million? The next renewal. Is this totally out of control and spinning out of control, or you think we're good where we're at right now, or how do you see the future of, being able to insure a pump company? Is it going to be better, worse, stay the same?
I think it's just going to be different. And as far as pricing goes, I think you're going to start seeing different mechanisms for companies to generate the pricing. What I mean by that is like there's some carriers right now that they're adopting like a per mileage rate, and so they'll say, okay, you're going to do this X amount of mileage, and they'll put a beacon in the car, or they can use your existing telematics to gather the data for hard braking and acceleration and all those driving habits that are captured. And then at the end of the month, they'll give you your monthly premium based on your safety driving score.
Like what Tesla does right now with me.
Yeah.
Every month they go, well, this is what you did. This is what we're going to bill
yes.
you.
Yes. Yeah. Like a lot of your personal auto insurance companies do the same thing, right? They have a beacon that sits on your windshield and it tracks your driving habits, or it plugs into the computer of your car. and it tracks all that, brings that telematics back and says, hey, here's the justification for your increase. And, and usually that's the case because very few people drive like your grandma. But if you do drive like a grandma, you're probably going to get the same rate or have a flat renewal or a reduction. Or a lot of them do like accident forgiveness. You'll probably hear that from like some of these advertised companies. So when it comes to auto, that will probably be more and more of a trend, and that's going to really separate the good, the bad, and the ugly, right? Because it's like right in your face. Here's your score. It shows up once a month or even daily. You can track it and see kind of how you're trending, and then make changes based on that. Say, oh, this guy or this operator, this driver is a repeat offender. Like, let's get some training at a minimum and set up a new company policy based on this data, right? And then on the job,
Wait 1 second. So on the data
yeah,
on the driving side, so what that would do is it would drive pump companies to maybe have more branches and drive less. Their operator
yeah,
would drive to that branch, and so there would be less liability because the pump would be driving less, and the liability kind of would be transferred to the you know that liability from the operator driving to the yard instead of driving that pump that whole time.
yeah,
So you know
yeah. And it like you have your service pickup trucks too, right? It's the same thing. Like if you know that your pricing's based on mileage, because the more mileage, the more risk, then you're gonna maybe say, hey guys, we're not gonna take trucks home anymore. It'll change that because it's costing us too much money. So you're going to come and park them at the yard and drive home with your own vehicle because now there's a reduction in cost. Like I could see certain things like that
and, and
changing
and pumps you would
operations.
charge port to port instead of one way travel maybe,
Right.
so because it's going to
Yeah.
be a major factor in your cost, right?
Correct.
So
Yep. Yeah. So I could see things like that affecting it, but
and then on the
you
job
know,
side,
the yeah. So on the job side, that's general liability exposures. That's those things we talked about: hose whips, boom pump or boom tips, and power lines. Just man, the power line thing. It's never made sense to me how those happen. I don't get it. Maybe I just need to get better educated. Maybe I'm ignorant on that. But um, the boom tip thing, it's typically because there's been utilities that have been recently backfilled and either hasn't been compacted or there's been no inspection prior to setup. And once you get surgeon, a PSI is is at such a high level that you have to have good soils to hold that load. And it's when it doesn't, it's a disaster. It can lead to fatalities or serious injuries, or at a minimum, like busting up the boom. And now it's down. It's costing you money every day just to repair it, let alone the opportunity cost revenue. So I think every business has these constraints that you have to deal with, but those ones that are on the job seem like they're absolutely preventable. And so I think you're going to see from insurance companies and start to see like, okay, this is a trend. These boom tips keep happening, and why, right? So they have to really start digging in. The unfortunate thing is that there's very few underwriters that even know what a concrete pump truck is. I'm constantly educating this that you'll say concrete pumping, they'll say, oh, so like the ones that the big drum, like that's kind of, they're trying to like describe it. They sound like a caveman trying to describe it. So it's like no, these are not ready mix trucks. They're not, so you have to like kind of start from scratch for someone and just basic education. But the underwriters that know what's going on and they know your risk because they've been educated by me or another broker that's actually doing that, communicating that, they're going to have to start identifying ways to separate the good and the bad, right? You have to do that. And so the guys that are embracing safety and are willing to give up chasing down money to be safer, that's where it's going to make a difference on your premium is, prove it to me as an insurance company that you're somebody that I want to give you a policy for. So I think that the heavy swings, like it just kind of caught up to us. A lot of it is driven from litigation attorneys. That's like these nuclear verdicts that are just out of control, where the actual damages and then the awarded amount is nowhere close. Um, so, that's cameras come into effect to cut that crap out like quickly. The job site stuff, again, I don't want to be repetitive, but it's so preventable in my eyes. And I think that you can just go the extra mile to do everything you can to prevent that. Keep yourself out of a situation where you could be in a nuclear verdict and deposed with a, horrible accident. Yeah, there's a lot of things that are out of your control.
Are we
But the
turning the
ones that are,
corner, you think, or we don't know? Like next year, these guys when they renew, it might be another 40% or 100% or 5 times their rate.
well, at some point, it's just not. There's no way they can afford it,
Right.
right? You
That's what I'm
can't do
hearing.
that.
Yeah, that's what I'm hearing. Like, if we have a
So,
jump like this again, I'm done.
right, yeah, like we've had a couple that we insure that they've parked trucks and gotten rid of guys because they can't afford. They have to reduce their fleet. That's horrible, right? They should never. Insurance should never be a reason why you have to park a truck. That sucks. But it's kind of caught up to us. I think I'm hoping that it's going to level out. I just don't see any evidence of that right now. This is the worst I've ever seen it right now. And so we're kind of at the peak, right? And I don't know how long we're going to stay up that high. I think it really has to be an industry change to say, hey, we have to get better across the board. And we have to do better training and we just have to take our time. Ready mix guys have that 90-minute time element where when they batch, they have 90 minutes to get that out of the chute. We don't really have that, so to speak, right? We don't have product liability. So you have to kind of slow things down. You got to be quick, I understand, and hustle, but slow down on the things that are going to move the needle to be actually safe. Like uh, safety first is like those cliche things, but if you can actually adopt that in this industry right now for how things are, you have to do that, right? Like it's just so bad right now that you have to do something different. You can't just keep saying this sucks. You got to do something different. So I don't know, Todd. I think that we could. I'm hoping to start seeing it leveling out. Um, I just don't see any evidence of it right now. It's as bad as it's ever been.
Awesome. I think that'll do it for this episode. Thank you so much, Matt and Todd, for both joining us today and sharing your insights. I think it's awesome to talk through all of this with the real world examples that you can share and kind of give these companies strategies they can put into action.
Appreciate it. Thanks, guys.